I'm Corey Johnson, and this is Bloomberg Technology. Coming up, no slump yet for the Trump bump. That's right, the NASDAQ, Dow, the S&P 500, all hitting all-time highs, propelled by tech leader Apple. Plus, PayPal buys up Canadian TIO. We hear from PayPal's COO, the man responsible for Venmo. That rhymed. It's amazing. Toshiba's falling star, why a $6 billion nuclear write-down is just the beginning of the problems for the Japanese giant. But first, to our lead. U.S. stocks continue their record run. Major averages at an all-time high. Bloomberg News stocks reporter Abigail Doolittle was watching it all day here in New York. Yes, here in New York. So what happened?
Great to be here with you, Corey. Great to have you here. And it's pretty amazing. Yet another day of simultaneous record highs for the Dow, NASDAQ, and the S&P 500. And one of the common factors here is Apple. Apple putting in its first intraday record high since 2015, right about 2 years ago. Two record highs in a close. Two record closes in a row. And behind this is continued bullish chatter about the iPhone 8 supercycle, the potential for that. Plus, we're seeing strong demand for that iPhone 7. So really big turnaround from the disappointment on that iPhone 6S. What stands out, though, Corey, you were just talking about the Trump bump. Now, out of the election, tech was really a losing sector. When we hop into the Bloomberg and we take a look at #BTV 5421. This shows a lot of the technology shares out of the election.
Wait, what am I looking at here?
Yeah, there's a lot going on here.
No, tell me.
Well, the main point, if we really take our time with this, the main point is in orange, that is Apple, really hitting new highs this year, up about 18% on the year. And you'll see that the other stocks are trading closer to even on the year.
So that goes back to what date?
This goes back to the election.
Okay.
So if you recall, tech initially was weak out of the election.
Banks were strong. Banks have stayed strong, but Apple's really picked up the pace, as has the rest of tech.
And tech is actually the top sector this year, even more so than financials. And much of this is Apple right there in orange.
Well, you certainly see those last few weeks. I've been through a few bubbles. The dot-com bubble looms large. And the big companies then were companies like WorldCom and Dell and Cisco.
WorldCom, have not heard that one in a while. Well, Cisco, yes, you're right about that. And Cisco, actually, they report tomorrow after the close. They are trading, the stock is trading up 4 days in a row. Into that report, investors are looking for 56 cents in adjusted earnings on $11.5 billion. Now, they have beat 8 out of the last 8 times on adjusted earnings. And as you know, Corey, here, the story is whether or not the company can transition from those legacy networking businesses toward new businesses, security and software. They've done a pretty good job of it so far. Tomorrow we'll see on this quarter. It looks like it's pretty low bar, not a lot of big expectations for Cisco. Probably meet those numbers and the stock will be okay.
Well, they're the kings of guidance, but and managing towards that guidance. But it is amazing to see tech leading the way once again. Abigail Doolittle, thank you.
Thank
you so much. Good to see you here in New York. All right, well, Bloomberg T has been live all day from this year's Goldman Sachs Technology and Internet Conference in San Francisco. It's where a number of the nation's top bankers from Goldman and investors from all stripes converge with Silicon Valley's tech titans. Carolyn Hyde is currently standing by with Goldman Sachs Managing Director Heath Terry, who covers Amazon and Netflix.
Yeah, Corey, welcome from San Francisco. You over in New York today, and I'm joined by Heath Terry, as you were just mentioning, lead analyst on the internet sector. I want to get your take, first of all, with not only Goldman Sachs' own share price at a record high, but you've got Apple's once again. I want to get your sense on whether, as an internet guru and looker on, are we in a bubble? Is this back to 1999?
Sure. No, I think you look at where valuations are right now, and these are very, very different companies, right? Amazon's generating billions of dollars in operating cash flow. Many of the internet companies that are public right now are trading well below the valuations that you've seen historically for the internet sector as a whole. There are certainly some spots within largely the private internet space where you've got valuations that have some of those same characteristics that you've seen. But even that over the last year has really come off in a way that doesn't look anything like a bubble, certainly nothing like what we saw in '99.
Let's dig into some of the names that you cover, not only the PayPals, the eBays, but let's focus in on Amazon for a moment, because we have seen this company perhaps disappoint when we're looking to first quarter forecasts. The investment story is still very much there. Is Amazon investing in the right areas for longer term growth?
Sure. I mean, I think if you look at two of the biggest trends that we have within technology, the shift of retail dollars online from traditional retail, look at what that's doing to traditional retail, and then cloud computing, which is easily one of the biggest stories in technology right now. Amazon's exposed to both of those. And so the investments that they're making, the money that they're spending on that, we think it's money well spent. And if you look back historically, Amazon generates one of the highest cash returns on cash invested of any company in the S&P. And so when a company like that, with that kind of track record, is investing money, that's a good thing.
I hear you're the man to talk about AI with. Talk to me about it. How is this going to change everything? Because it seems as though Amazon has led the charge, particularly when it's coming into our homes. Alexa really dominated the space when it came to CES.
Sure. I think what Amazon's doing there, the investments that they're making in AI, what Google's doing and the investments that they've made in AI, we're first pitch, first inning in terms of where we are in this investment cycle that we're in, or in this technology investing. But as Baidu has said, AI is sort of the next electricity. It's going to make everything better. It's going to make everything more productive. It's going to run through everything from something like Alexa to the cars that you're using, to the maps that you use, to the way that risk is priced by credit card companies, the way that farmers are planting, the way that factories are run, and ultimately we think that has the potential to kick off another wave of productivity, tech-driven productivity, that we haven't seen really in the last 15 years.
Can you put a number to how much this could affect GDP? How much this could?
I mean, we've estimated that there's over $500 billion in impact to the economy from AI over the next 10 years.
One last question, sadly, but I've got to get you on Netflix, your views on that company that you analyze.
Sure.
This is an M&A target, do you think, or is this a company that is standalone and continue to grow, and at what sort of pace?
It's a potential target. I don't think it's a company that wants to be sold. I think they see their opportunity as being bigger as an independent. And when you think about how incredibly disruptive they have been to all of media, for them to go and then become part of a media company or part of a bigger technology platform, it feels like that's missing out on the payoff of this investment that they've been through. It's not like the company hasn't done incredibly well, but when you think about the scale of this global media coverage that they've built, this content environment that they've built, I don't think we've seen nearly the payoff on that yet that we're going to.
Payoff, but there are some risks. What about regulatory risks? We know that net neutrality is something that has been potentially looked at, particularly the new head of the FCC not too pleased.
Sure. They went through that in pretty detailed ways prior to the Title II net neutrality implementation that you saw. They struck deals with Verizon, they struck deals with Comcast and with AT&T that at least addressed what ultimately net neutrality ended up addressing for them. It meant slightly higher costs, but it ultimately didn't have enough of an impact on their financials to really matter to anyone. For Netflix, the big cost is content. Distribution's a much smaller piece.
And also one of the costs for Amazon as well. Heath Terry, it's been great speaking to you. Thank you so much for giving so much for your time here at the Goldman Sachs event. Corey, back to New York.
Thank you, Caroline Hyde. And of course, thanks to Goldman Sachs' Heath Terry. Our one stock we continue to watch, Toshiba. Tuesday was supposed to be the day the company explained how much trouble its nuclear business was in, but we got that and more. 2 hours after the expected time of said report, Toshiba said they needed another month for regulators and for them to finalize their earnings. And late in the afternoon, dropped another provisional report, chock full of surprises. Toshiba saying it's going to take a $6 billion write-down of its nuclear unit. It will also stop building new nuclear plants and may sell that business altogether. The company also considering selling a majority stake in its memory chip business, once considered one of Toshiba's few bright spots. And taking the fall for all of this, Toshiba's chairman, who is resigning. Stick around, we're going to hear from the man who created the payment app beloved by millennials, Venmo. PayPal COO Bill Reddy joins us from the Goldman Sachs Technology and Internet Conference. This is Bloomberg. We're watching Amazon Web Services unveiling a video conferencing product called Amazon Chime. It'll work on desktop and mobile, aimed at the business market. and will compete with existing products from Microsoft, Cisco, and LogMeIn. Who's that bad news for? LogMeIn, down 7% in Tuesday trading after the announcement of that new competition from Amazon. We'll stay with Amazon. The company has begun letting some investors in on some of the ingredients to its secret sauce, specifically how much money it brings in through its Prime membership program and other subscription services. The first time Amazon's broken out this number. It could be a big deal for investors trying to get clarity on this secretive company and its potential to create cash. Cher Overday joins us right now. We wrote a column about this in Bloomberg Gadfly. This is big stuff because it's been this. Really, all of the components of Amazon's business are kind of a black box. They're really reluctant to break down anything, specifically unit costs, number of customers, and how even Prime shipping is supposed to work.
Yeah, it's amazing how little we know actually about how Amazon makes money. So what they disclosed the last few days in a 77-page annual report was the revenue that they generate from subscriptions to its digital businesses, including things like Prime.
So what do we learn?
So we learned that they generated more than $6 billion last year from various subscription services. And if you do some estimates about the percentage of that is from the $99 or so annual fee to Prime and the amount of money that people are paying for Prime, it seems like Prime probably has about 65 to 70 million customers globally. Which is, interesting. Again, that's a number that we don't really know, though there have been estimates out there over the years.
Now you said $6 billion, but that's just the membership. It doesn't show you how much those Prime members are spending. Right. And that's the other great mystery, right? Which is, they go through all this trouble to get Prime members. We expect, all of us who analyze their business model, that those people will spend more, but we only know it through surveys and stuff. We don't really know.
Yeah, this is just so like Amazon, right, that even when they disclose a number finally, it just raises more questions than it answers. And you're right, we don't know the lifetime value of a Prime shopper versus the non-Prime shoppers on Amazon. And more importantly, we don't know how much those people cost Amazon, right? Because two-day shipping is not free. It's free to the customer, but not to Amazon. We do know about shipping losses, right? They give us shipping losses every quarter and with every earnings report every quarter and annually. But we also don't know the churn rate. So we don't know how long people stay with that business. So it really is hard to tell. Of that $4 billion, it's about $6 billion. It's about 4% of revenues. Yep. We don't know how many of those people are going to just keep paying every year, and though maybe their marketing costs go down at some point, or maybe the opposite. Exactly. It's this problem with Amazon that the only people who know are inside of Amazon, and we're not really going to get a glimpse into that. But I do feel like Amazon's not dumb, right? And Prime they've said this is one of the 3 pillars of our business, and they wouldn't be investing so much money in getting Prime members if it wasn't beneficial to Amazon in the long run.
We've got a chart on shipping costs right there.
Yeah, the shipping costs, as a percentage of revenue, it's continued to go up. I believe it was 12%.
Yeah, but it hasn't got a lot worse. It's one of the things I track in my model.
Creeping up.
But and sometimes it might reflect more sort of rising gas prices or things like that in any given quarter. But it does raise a question. If you've got an Amazon Prime member who buys more stuff, then the shipping losses might get greater even as the top line gets better. And you heard Heath Terry in the first block of the show talking about cash conversion rates, where it's not a business designed to make profit, but it is a business designed to create cash. And it is certainly doing that in excise amounts.
Yes, exactly. That is the one thing that Amazon is very good at. They have, very tiny profit margins, but they are quite good at converting. And the TV
shows are good.
TV shows are good and getting better.
Do you have a favorite on Amazon?
I was a big fan of, I'm going to blank on it, a British television series. Nope.
See, I'm watching Man in the High Castle. It's good stuff. And the next season of Bosch coming up soon.
Okay.
Check it out. Cher Overday of Bloomberg Gadfly. Thank you very much. All right, coming up, we're going to measure the outlook for blockchain services under the Trump presidency next. This is Bloomberg. All right, now back to the Goldman Sachs Technology Conference in San Francisco. Blockchain, big at this year's conference. Among the most important players, Ripple. The San Francisco-based company uses blockchain to settle financial transactions between some of the world's biggest banks. Caroline Hyde is still there, standing with a guy named Brad Garlinghouse, who's also a former AOL executive and author of the infamous Yahoo Peanut Butter Memo. Caroline?
He is a man that you know well, Corey, and I'm just sat opposite him right now. Of course, Brad, we're just hearing about potentially the fact that All of this, when we're looking at blockchain, is potentially in hype mode. Are we overhyping blockchain? When does it become a part of everyday lexicon? When do all banks adopt it?
Well, I think there's parts of what's going on with blockchain that are overhyped. It's not necessarily a solution for everything, but there are examples where it's a perfect use case. It's a perfect solution for payments, for example. You have two people trying to settle a transaction without the risk of the central counterparty. You could do that with blockchain today. Ripple has been fortunate. We now have 10 production accounts. We announced the third largest bank in India last month, as well as the largest bank in the Middle East going into production.
What about new clients? What about international expansion? What about being adopted en masse? Is that something that you foresee, or will you not be able to get into all banks because they'll see a conflict of interest here?
Well, we work with about 90 banks worldwide today. We've announced 10 of those production contracts. There's about 8,000 SWIFT-enabled banks and almost 20 to 30,000 banks around the world, so we've got a long way to go. But we also think that we're clearly solving a real problem around cross-border payments. It's amazing how much friction there is and how much time it takes to send a payment. It's your own money.
Don't I know it? I'm a Brit in the US. It's painful.
Well, I make the joke, and even on your show, it's easier to send $10,000 by taking it with you on a plane than it is to send it through the banking system. We're solving that, and I think in the future, you're really going to see the banking sector compete with the Alibabas and the Amazons and the Googles, and they need to be able to compete on a level playing field with next generation technology like blockchain solutions.
Interesting that you're talking about competing with some of the tech giants there. I want to understand how this competitive landscape works in your mind's eye, because you mentioned SWIFT-enabled banks there. Is SWIFT your key competitor? What about the likes of the startups that I'm seeing grow in the United Kingdom, in Germany? I mean, TransferWise comes to mind. That's the way I can send payments very swiftly. How does it all work for you?
Well, so we view TransferWise as solving a great problem that the banks should be solving. And so really TransferWise is a potential partner or customer of ours. When we look at the payment stack, a lot of things are happening at the top level of the kind of application layer of that stack, but the infrastructure is all the same.
Yeah.
Even cool, innovative things like Apple Pay. It's really just a different way to swipe your card, and everything underneath that wave of the phone is the existing infrastructure. Our view is if we really want to unlock innovation throughout payments, we have to reset the rails, we have to reset the infrastructure, and that's what we're focused on.
And is blockchain being adopted en masse by banks, do you think? What's stopping them? What's holding them back? Are there worries?
You know, we've been really fortunate because I think we're solving a clear use case that is a pain point for their customers. We're getting a lot of adoption, a lot of activity. It takes time, of course. You know, banks have a lot of other IT projects that go on internally. But, you know, we've been fortunate that we're not seeing banks say, no, we're not interested in that. We see banks say, we're very interested in that. Let's talk about Q3 or Q4 as opposed to necessarily right now.
What about Ripple? Remain independent? People eyeing you up? Have you had any offers?
We've had a great run, and certainly as I think blockchain has become more hyped, frankly, we get more and more interest and attention. But right now we're focused on the customer. And if we can deliver on that, continue to deliver more customers and solve more of their problems for their customers, we'll be in a good place regardless of how we choose to see the future unfold. I
mean, I know you don't deploy Bitcoin. That's one type of cryptocurrency that uses a blockchain. Bitcoin, is that overhyped? Is the price about to come smashing back down?
You know, well, two thoughts on that. One is we're almost the opposite end of some of the Bitcoin community. Some of the Bitcoin community have said down with banks, down with governments, and down with fiat currency. We take a view that banks are going to be at the heart of this internet of value, where value can move the way information moves today. We think governments aren't going away, and with fiat currency, while there's a role for digital assets like Bitcoin or like a digital asset we use called XRP, we don't think that's the end-all be-all. And so we are solving a liquidity challenge for banks with XRP. The price of Bitcoin has been really volatile, and of course, when there's volatility, banks don't love that. Well, the only people that like that are speculators and traders. We think to solve that institutional use case that we're focused on, we want a nice stable asset, and the asset we work with is called XRP.
Let's move away a little bit into your history, into your past. We had Corey Johnson just talking about the Peanut Butter Manifesto, the legendary piece that came out, about a decade ago, all about your previous employer, Yahoo, the fact that potentially it spread itself too thinly. What was this company? 10 years on, changed?
Yeah, it's amazing to me that it's been 10 years. I try not to imagine I've gotten that much older, but I think what I felt like 10 years ago, and I very much was a passionate Yahoo employee, loved my experience there. I felt like Yahoo increasingly was spreading itself thin, and that what were we trying to be the best in the world at? And whether you're Yahoo or frankly any other company, I think you have to understand what your true north is. What is the primary problem you're solving for your customers? And I think Yahoo is trying to be a lot of things. Were they a search company, a mail company, a media company? an advertising company, and they were okay or maybe kind of good at a lot of those, but not great at any of them. And then Google comes in and steals search, and other companies come in and steal mail, and other companies come in and steal media. And I think Yahoo could have and probably should have been more focused and more concentrated about what they wanted to be great at for their customers.
And now another company comes in and steals Yahoo, buying it, Verizon. Potentially, it's not even gone through. Do you think this deal will go through, and do you think they'll be able to get value from what Yahoo's consumer base is?
I think it'll probably go through. I think obviously it's been a rough ride for the Yahoo team, and they've had some security breaches that have caused some turbulence there. But I think there is great synergy in putting Yahoo and AOL together. It's something that Tim Armstrong has been excited about for a long time. And I think that there's real value to be created there. And Tim did a great job with AOL, and now part of Verizon. But I think he can continue that by putting those two assets together.
Two assets that you previously worked for. It's great to have you on. Thank you so much. A great conversation. None other than Brad Garlinghouse, of course, Ripple CEO. Corey, to you.
Thank you very much, Caroline Hadd and Brad Garlinghouse, of course, as always. All right, coming up next, we're going to hear from the man who helps you settle your debts. The creator of the payment app Venmo, Bill Reddy, is next. And on Wednesday, David Weston will interview Federal Reserve Board member Daniel Tarullo, who announced earlier this month he's going to resign in the spring. You can catch that exclusive conversation on Bloomberg Daybreak Americas at 8 a.m. Eastern. This is Bloomberg.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. Iraq started deploying units to the western side of the Tigris River today in preparation for a renewed assault on Mosul. The eastern side of the city has already been retaken from the Islamic State. Iraqi special forces are already in place southwest of the city. Malaysian officials have confirmed now the death of Kim Jong-nam. He is the brother of North Korean dictator Kim Jong-un. He was killed at Kuala Lumpur International Airport early Monday while awaiting a flight from Macau. Kim Jong-nam had been reportedly critical of his brother. Prime Minister of Israel Benjamin Netanyahu meets with President Trump tomorrow. He landed in Washington last night ahead of the high-profile meeting. Netanyahu says he would handle ties with the U.S. in a prudent manner, but steered clear of specifics. Somalia's breakaway territory of Somaliland wants an exemption from President Trump's travel ban. Somalia was one of the 7 countries named, but Somaliland considers itself independent after breaking away from Somalia in 1991. London will hold a free outdoor screening of Best Foreign Language Film nominee The Salesman on February 26. That's the same day as the Oscars. That's after director Asghar Farhadi canceled plans to come to the U.S. in protest of President Trump's travel ban. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. It's just after 5:30 p.m. Tuesday here in New York, already 6:30 Wednesday morning in Hong Kong. I'm joined by Stephen Engel with a look at the markets. Stephen, good morning.
Good morning, Elisa. Well, Asian stocks poised to rebound after yesterday's bit of a down day, perhaps taking a cue from Janet Yellen's more optimistic comments over the U.S. economy. New Zealand shares up, as are Sydney futures. However, Nikkei futures down 0.2%. China will again be in focus across the region today as new credit surged to a record high, aggregate financing surging to a higher than forecast 3.74 trillion yuan in January. That's more than $500 billion U.S. dollars, showing that despite authorities' efforts to deleverage the economy, debt continues to drive Chinese growth. We're also going to be looking at a couple of big Asian tech giants. Toshiba in focus after announcing it would take a $6.3 billion write-down on its nuclear business, and its chairman Shiga will step down. It's delaying third-quarter earnings release till March 14th. And Samsung also in focus as prosecutors, a court will decide whether to issue an arrest warrant for Samsung's heir apparent J.Y. Lee tomorrow on allegations of bribery. I'm Stephen Engel in Hong Kong. More Bloomberg Technology coming up next.
This is Bloomberg Technology. I'm Corey Johnson. Back now to the Goldman Sachs Technology and Internet Conference in San Francisco. PayPal announcing plans to acquire TIO Networks. TIO is a leading bill payment processor, processing more than $7 billion in consumer bill payments in fiscal 2016. Caroline Hadd is with PayPal COO Bill Reddy, who helped turn Venmo into a millennial favorite. processing a stunning $17.6 billion in payments last year. Caroline?
Indeed, and now it turns our attention to the new acquisition. Bill, talk to us about TIO. $233 million being put to work. How does this build out PayPal?
Well, so, TIO is a bill pay provider for the underserved. And really, PayPal from our very beginning has been a democratizer of money. And we really think a lot about how we democratize the management and movement of money around the world. And the underserved is a big part of how we think about bringing folks into that democratization. And TIO as a bill pay provider to the underserved, we think of bill pay as a critical service for those folks. It's also the underserved. We think about as a population of nearly or more than a third of the U.S. population, 2 billion plus people around the world that are underserved by traditional financial products, that we think we can give a pathway not only into financial inclusion, but also into the digital economy. And so we think about TIO as part of our broader vision around how we democratize the management and movement of money for consumers around the world.
So are you thinking about bringing consumers from TIO onto other PayPal products? What sort of ones would be easy to offer them right now?
Well, so, with TIO, you can walk into a store with cash and make a bill payment to one of their 10,000 plus billers. You can do that at 65,000 locations around the U.S. We have similar products with PayPal, for example, like PayPal Cash that we announced a few months ago, where you can walk into a 7-Eleven, load money onto your PayPal account, and even though you may have not had a bank account or a card, all of a sudden you now have money in a PayPal account and you're part of the digital economy. You might not have been able to make e-commerce purchases before, but now you can walk into a 7-Eleven, load cash onto that, and with PayPal, you're now part of the digital economy. We think this acquisition serves a similar customer segment that we can give access to a broader set of digital products as well.
It sort of screams to me that I think of underserved, unbanked, I think of the emerging markets as well. How does this fit into the internationalization of PayPal?
Yeah, so we think about that, we're in nearly 200 markets around the world, nearly 200 million consumers around the world, and 2 billion plus consumers are considered underserved worldwide. And so we think about ways we can serve those folks and bring them into the digital economy, give them access to financial inclusion. Zoom that we acquired 18 months or so ago also has an international play, those international remittances, oftentimes serving the underserved. Bill pay is one of the things that Zoom provides to those folks. And so we think of this as a great complement to what we're doing with Zoom and what we're doing with access for the underserved worldwide.
I mean, of course, you joined PayPal via an acquisition. You
That's
had
right.
brought Braintree, brought Venmo into the larger hub.
That's right.
What is the mindset of PayPal about acquisitions at the moment? Is it, you talk about the underserved, the unbanked, is it only that area that you want to make acquisitions? Where else could you be building up?
Well, I think, we've obviously had a huge focus in mobile. We did more than $100 billion in mobile volume last year. That's part of Braintree and Venmo coming in. And we think that there is a huge move to consumers moving to mobile as their primary computing device. Those are areas that are really interesting to us and where we've led the way and want to continue to push. We think about financial inclusion for both consumers and merchants as really interesting to us, and so those are places we'll continue to have a lot of focus. And we've had a number of great acquisitions, and we've also looked to go build organically in great ways. We did 11 plus strategic partnerships just in the course of sort of the last year or so, and that included not only Visa and MasterCard and traditional banks where we're partnering to bring services there, but also folks like Facebook, where we're a key payment provider inside of Facebook, and Google with Google Play, and a number of other technology partners that we're working with. So we're really bringing that sort of startup spirit and innovative mindset, both through acquisition as well as inside the company itself, to go really, really drive forward on mobile financial inclusion and partnering with the broader ecosystem to drive those things forward.
That was quite a change of tack when you got into bed with Visa and MasterCard. How is that coming to fruition? Because many feel, dare I say it, that PayPal was leading the charge years ago and it dropped the ball. It let other companies get ahead of it within the fintech space. Does the Visa and MasterCard agreement help win back some of that race?
Well, I think, PayPal's always been one of, by every objective measure, one of the most successful fintech companies, over the last 20 years. I think the partnership with Visa and MasterCard really, is a demonstration of how our interests are pretty aligned with the rest of the ecosystem. We have always really, really pushed for the digitization of cash, and brought a lot of volume to players like Visa and MasterCard and issuing banks and those types of players. And historically, there were some places where maybe we weren't working so closely on those things, but broadly, we've always had a common interest around fighting cash as the common enemy and bringing that into the digital world. And I think we've led the way on that, and partnering with folks like Visa and MasterCard and issuing banks lets us do even more of that.
Talk to me about your baby Braintree and about the competition that's out there. How do you stack up against Stripe? How do you fend off the competition when it comes to ensuring you're servicing the most fast-growing mobile paid ordered companies out there?
Yeah. Both Braintree and Venmo, from sort of standing start, 6-7 years ago, have grown into something, even beyond our own wildest expectations, with a huge portion of the best next-gen commerce companies in the world running on Braintree, Uber and Airbnb and Dropbox and folks like that. And so Braintree's continue to do really well and grow nicely there. And then Venmo now, at a run rate of $20 billion plus annually, has exceeded, just about, every sort of financial payment app you could think of out there, and most commerce apps to go with that as well. So both have continued to grow wildly, and we have lots more in store for those as well.
Just need to be able to put my UK bank account on a Venmo, and then it will help me so much more. It's been wonderful having your time. Thank you so much.
Great to be here with you. Thank you.
Already COO of PayPal. He brought up Dropbox there, who they service, and we'll be speaking to Dropbox in a moment, Corey.
Yes, and I can't wait to start collecting from you on Venmo, too. PayPal's been ready. And, of course, Caroline Hyde, thank you very much. Speaking of PayPal, we're going to sit down with PayPal Mafia member, Affirm's CEO, Max Levchin, on everything from Trump's travel ban to his current company. And coming up, we're also going to feature, bring your attention to an interactive TV function. If you type in Bloomberg Go, or Bloomberg TV Go on the Bloomberg, you'll not only be able to watch us live, but see previous interviews, see our lineup, dig into the companies that we are, Bloomberg functions that we talk about, and you become part of the conversation by sending us instant messages during our shows. It's only for Bloomberg subscribers. Check it out, TV Go. This is Bloomberg. So Microsoft has a new plan to fight state-sponsored cyber hacking. Microsoft thinks we need international agreements and independent groups to investigate attacks and to talk about them publicly. Microsoft President Brad Smith wants to see individual technology companies provide more security for customers. Microsoft currently fighting the U.S. Justice Department over customer data in 2 separate cases. These are just some of the topics we'll ask former NSA Director General Keith Alexander on tomorrow's Bloomberg Technology. We'll take you back to the Goldman Sachs Technology and Internet Conference in San Francisco. Caroline Hyde standing by with a member of the so-called PayPal Mafia, who now heads a company called Affirm. That, of course, is Max Levchin. Caroline?
Thank you, Corey. Yes, Max sat opposite me now, and I was just reading a piece where you were quoted saying, "You live in a land of giants. You are at the moment but a midget when you look at a firm compared to the likes of Goldman Sachs," and this is where we are, Goldman Sachs conference. How does a firm, which you have branded on your shirt, become more than a midget, be able to rival the giants?
Well, by growing as quickly as we have been. The road is shaping up nicely, but we're not particularly focused on measuring ourselves up to any one particular giant. We're much more excited about creating value for our customers, our merchant partners, our partners in the financial industry. Yeah. But I think the big trend in fintech has been a wrong one, where companies, not us, but many companies walk out and say, everyone here is a bunch of idiots. We're just not going to be anything like you guys. And that's just wrong. American financial system is probably the single best one in the world. And being a member of the club is an essential part of our plan and anybody who wants to be around for the long term. So I don't think I need to jump into being a giant, but I want to grow my way into the club.
Talk to us about that growth, because at the moment it's retail-specific consumer credit. What products will you be looking to next?
I think we're very much focused on our consumer credit view of the world. We are excited about bringing out a bunch of really new, interesting flavors of our product fairly soon. But we have a couple of completely brand new things that we're working on, which I'm always loath to pre-announce. I'm afraid I have to keep them for the launch as secrets. But I think delivering value directly to the customer is something that we're very excited about. So at some point, we will create things that speak directly to our customers.
You say the US is the single best economy in terms of its banking. What about the regulation then? We're looking at perhaps the regulatory environment becoming easier, quote unquote, for some of the banks if the Dodd-Frank Act isn't changed in some way. Is this a net positive, a net negative?
I think very much depends on the outcome of the changes. So much of the rhetoric around regulation stifling innovation is not untrue. In other words, I happen to agree that loosening some of the really tight grips that we have put on the industry right after the 2008 crisis, it's been a while. I think we can start being a little bit more open about, for example, rules around lending. But a fair amount of what was put into Dodd-Frank is as true as it was then today. And so just throwing it all out wholesale is also a mistake. So I think it's a little bit more nuanced than regulation, good regulation, bad. Regulation is important. It's necessary. Market does not always correct itself quickly enough, despite being a free market capitalist. I happen to believe needed for regulation. So it's important to engage with the regulators as they reshape the rules right now.
Is it important to engage with the new administration as well?
I think so. I think it is important to engage with a democracy if you believe in a democracy. I think sticking your head in the sand and saying, I just don't like what happens in Washington anymore, is foolish. I think as business leaders, as citizens, we have a responsibility to be part of the conversation, not run away from it. And I think you can be the loyal opposition. You can state, I disagree with this, I'm profoundly opposed to this, be it a social or economic matter, but staying quiet or running away is not an option.
As you see the land lie at the moment, do you feel that the relationship between the White House and Silicon Valley is becoming better and more open, with your ex-colleagues like Elon Musk and Peter Thiel sat by at times Donald Trump? Or do you feel that with the backlash of the travel ban, walls are going back up?
The honest answer is that I think today's day 24, if I'm counting correctly. The scale on which we measure these outcomes, I think, has to be enumerated at least in quarters, if not years. So it's a little too early to tell. I think this presidency has certainly been not shy about executing on its plans and creating controversy. So people react to that, but they will be judged by long-term impact of their rules, and that will only play itself out in time.
And we hope you're not shy about executing on your plans when it comes to a firm.
Never.
Do come and see us when you have things to announce and the new launches. Thank you very much, Max Levchin, as ever, the CEO of a firm, and many other things that go on in his work-life balance. But Corey, to you in New York. All
right, Caroline Hyde, thank you very much, Max. Thank you as well. Walt Disney's Maker Studios reorganizing its online unit after Disney cutting ties with YouTube star PewDiePie due to some anti-Semitic content in his YouTube videos. And Disney says the reorg is unrelated to the decision to drop PewDiePie's channel, one of the most subscribed to on YouTube, brought in millions of dollars of advertising and partnership deals for the Swedish celebrity. PewDiePie made about $15 million a year himself as YouTube's highest paid star. On Wednesday, Bloomberg's David West will interview Federal Reserve Board member Daniel Tarullo, the go-to man on enforcing banking regulations, but who is leaving the Fed. You can catch that exclusive conversation on Bloomberg Daybreak Americas at 8 a.m. Wall Street time. Coming up, shares of FireEye rose after its biggest shareholder had positive things to say about, you guessed it, FireEye. We're here from the company's CEO, Kevin Mandia. Next, this is Bloomberg. Story we're following: the Russian state-run company Rostec shipped more than 300 servers with Russian-made microchips to government entities, including the Interior Ministry. Of course, it's a loss for IBM, as according to an emailed statement from the company. These shipments replace equipment that was made by IBM and other foreign vendors. In September, we reported that Moscow was dropping Microsoft for domestic-made software on thousands of computers after President Vladimir Putin called Russian authorities to reduce their dependence on foreign technology. Meanwhile, FireEye's largest shareholder continues to stand behind the cybersecurity company and plans to buy more shares, according to an email from Shapiro Capital Management, which does not think that it is time, according to the letter, to pursue a sale. Shapiro says it's too early to judge. FireEye's CEO took over only last June. Caroline Hyde spoke with that CEO, Kevin Mandia, about the rising threat of cyber attacks and what it means for that company earlier at the Goldman Sachs Tech Conference.
I have to harken back to the 90s when I was in the Air Force. And one of the things we did in the Air Force is we said, you know, if an air base got compromised, there's the wing commander, the one-star general's challenge. So they escalated the responsibility of, if there's a security breach, you're the one accountable. What happens when you make the head of an agency accountable for cybersecurity is it gets taken seriously. And I think that's going to be part of the executive order, is to say, hey, listen, folks at the top, cybersecurity, if there's a problem, if there's something that goes wrong, it's you that's held accountable to it. That'll make a difference.
What about the spending on cybersecurity? It seems to have lagged the threat that has been on the rise.
Well, I don't know. I think that when it comes to cybersecurity, there's a lot of deterrence in cyberspace, but there's also a lot of deterrence outside of cyberspace. So when you look at the spending to deter cyber attacks, it's a pretty broad swath of things that might be applicable to that.
When we're looking at where these attacks, these threats are originating from, it's interesting, just today the news, Michael Flynn resigning from the National Security as a National Security Advisor. It looks as though perhaps the desire to become closer to Putin will therefore become slightly less within the White House. Is that a good thing or a bad thing from your point of view?
Well, I'm not really sure. As a cyber guy, all I can tell you is I observe what Russia does in cyberspace. They do cyber operations like most modern nations do, and I don't think that's going to change. Whether you have a Republican in the House, a Democrat in the House, there will always be cyber operations by modern nations. It's the oldest or second oldest profession is espionage. So.
But are they growing in veracity, in pace?
You know, I saw it grow a little bit. I should say this. I saw it change. I first started responding to breaches out of Russia in 1995 when I was in the military. So I've seen this for several decades. Something that changed in 2014 is for the first time in my career, as we responded to breaches that we attribute to the Russian government, is they didn't go away, meaning they knew we were responding to a breach. We thought it was the Russian government, and they let us observe what they were doing. Their kind of forensics changed. The fact that they didn't go away, I think their targeting got a little broader, and I think that's part of the reason why their kind of forensics went down, is they're operating at a scale and scope that's a little broader or a little wider than they're used to. And then recently they also started hacking and potentially leaking documents. So we see the rules of engagement change over time, and I think that'll just continue.
I'm going to bring it back to the administration because Thomas Bossert, assistant in terms of handling counterterrorism, is he the right man? He certainly has experience within cybersecurity.
Well, I've only spoken to Tom one time so far, but I can tell you this. I know the people he knows. We had a great conversation, and he's talking to the right people. So there's plenty of folks that have been in cybersecurity for 15, 20, 25 years that get to see on the front lines what the adversaries are doing, and Tom's got all these people and all this capability at his fingertips.
How does a company like FireEye capitalize on the sudden surge of whether it's just media perception of more attacks or indeed the real nature of more and more ferocious attacks?
Well, one of the things that we've always wanted to do and we think is strategically important is respond to every breach that matters. That's how you learn what are the threat actors doing. And then you also get to see firsthand how is our technology being evaded? How are we being circumvented? So that's a strategic thing for us. So every time you see the threats rise, you see the attacks rise, you see FireEye more involved in figuring out what happened, what to do about it. When the threats abate, you also want to have that same knowledge, though. Right now, I can tell you this, no matter where we are in the globe, if the threats abate a little bit here in the United States, the Middle East pops up. In South Korea, you have North Korea doing the attacks. The Middle East right now is just a hot zone of cyber activity.
That was Kevin Mandia, CEO of FireEye, speaking with Caroline Hyde. Well, that does it for this edition of Bloomberg Technology. We'll continue to cover the Goldman Sachs Technology Conference Wednesday. Last year, we talked to Gary Cohn, who went straight from Goldman Sachs to the White House. So you want to pay attention to Chief Operating Officer David Solomon, who joins Bloomberg Markets at 2:15 New York time tomorrow. Remember, all the episodes of Bloomberg Technology are live streaming on Twitter. Check us out at Bloomberg Tech TV. Weekdays, 5 o'clock on Wall Street, 2 o'clock on the West Coast. That's it for now. This is Bloomberg.